Is this fund secure? Is this fund stable? Stability and security of a fund manager or your investment in a particular fund, be it a money market fund, a fixed income fund, a balanced fund, a special fund, or whatever form of collective investment scheme that you are in. The question of security and stability of that fund. Many people, when they are pushing a product, that is a sub fund of a scheme of a particular fund manager, they always bring in the brand name of the parent company. For purpose of understanding, what is a parent company? A parent company is one that owns or controls by way of shareholding another company to a tune of more than 50% of the share capital of that other company. The company that is controlled, we call it a subsidiary, which can either be a fully owned and controlled subsidiary. That is the case where the parent company owns 100% of the share capital of that other company, or a partially controlled and owned subsidiary where the parent company owns and controls over 50% of that company. Let's bring in an example. When we look at the largest fund manager by ranking and market share, that is the CIC Asset Managers Limited. This is a subsidiary of CIC Insurance Company Limited. Another example, we have Britam Asset Managers Limited, a fund manager, which is owned and controlled by Britam Insurance Company Limited. That list can go on and on for over 15 or 18 fund managers in the market. We have so many fund managers under parent companies in the insurance sector. We have many other fund managers owned and controlled by banks, that is in the banking sector. These are the fund managers. Most common names that may bring relevance in the discussion is when we talk of money market funds or fixed income funds, balanced fund or equity funds or special funds. And we mention a name, like for example, when you talk of CIC money market funds, you'll be thinking that that product belongs to CIC Insurance, but the product belongs to CIC Asset Managers, a different company but owned by CIC Insurance. The reason for painting out that picture, many a times when commissioned agents are selling these products to the investors in the market, they will always throw in the name of the parent company. When someone is selling a product of CIC Asset Managers, they'll bring in the name CIC Insurance, the bigger brand, as a measure of stability and security of the product that they are selling. But now the question is that the right way to gauge stability and security of these different fund products that we have in the market or investment vehicles that we have in the market? In the last 2 or 3 years, we have had many new fund managers coming into this investment space, and other new ones are still getting registered by the Capital Markets Authority. These new fund managers and their products were, in many ways, they are beaten by the existing fund managers through mainly by the selling agents to beat the competition by bringing the aspect that the new ones are not stable, they are not secure, as a selling point to close that investment deal. But the reality is that the brand name is not what measures stability and security of the fund that you are investing into. Although the balance sheet of the parent company in one way gives a financial muscle to the existence of the fund manager, but not our investments as investors. And therefore, we have to look at the proper way of evaluating that stability and security of your fund where you're investing. And that comes through regulation and compliance of the fund manager, but not the brand name. A good example, Ethica Capital Limited's fund scheme with the 6 sub-funds received a lot of beating in the market as a new fund manager. But despite all that, this new fund manager, the new fund manager has grown within a short period of 2 years to amass an asset and management of excess of 10 billion. In looking at security and stability of the fund, these should be analyzed around the fund ecosystem, but not the parent company that owns. And in any case, if the brand name of the parent company, if the balance sheet of the parent company was so important in the stability and security of the fund manager, then I should see that size of the balance sheet translating into the returns that we are getting as investors. Why is it that these larger boys in the space cannot beat these newer, smaller players in the same space by the amount of returns that they are mopping from the market to their investors? There are several factors that can explain why the newer fund managers are sustaining a higher return to the investors. But that aside, the larger fund managers who have been in the market for the longest time and now are getting beaten in their own game and given a run of their money by the newer fund managers, they should be translating that into the returns that they are getting to the investors. So after 3 seconds short break, we shall be looking at a fund ecosystem and how you will use that one to gauge stability and security of your investment. And we shall be using some real examples in the market. See you after 3 seconds short break. Welcome back. And before we continue, we need to clarify something. The stability and security that we are talking about is not the fund manager business. It's about the fund, the investment that we are doing as investors. Because at the end of the day, the interests of the fund manager lies in his business. But the fund manager achieves his business through the business of creating wealth for the investors. The interest of you as an investor is wealth accumulation in that fund or income distribution from the same fund. And that is tied to the return that the fund manager is able to source for you from the market. So in our elaboration to answer this question, whether the fund is stable and secure, a fund security and stability is only guaranteed through the ecosystem that has been created through regulation. There are 5 key players in that ecosystem, where each player is checking on the other to guarantee safety, security, and stability for our collective pool of funds for investment. Then to understand about the stability and the security, we have to understand the distinct functions of these 5 players. The first player in this ecosystem is the fund manager. The fund manager is a registered company. This company will be owned and controlled by individuals, or better, we use the word persons, because person encompasses both natural persons and artificial persons. The persons who control and own this business may or may not be the directors or the operational players in the active running of the company. But the company that has been formed as the fund manager acquires registration and regulation from the Capital Markets Authority before the fund that is pulling our resources together as investors starts its operation. The fund manager, before bringing in the products, has to get registered and licensed as a fund manager by the Capital Markets Authority. So, what will be the functions of this fund manager? One function is, after incorporation, to get registered for regulation by the Capital Markets Authority, which is the regulator. The function number 2 of the fund manager is to innovatively craft products or create products through a collective investment scheme that will use to bridge the gap between us, the investors, and the users of our capital. In that process, creating wealth through the returns that will be paying our investments. Function number 3, these products or the investment vehicles that the fund manager will innovatively create, he must get that vehicle registered and regulated by the Capital Markets Authority. So at this point, not just the fund manager, but also the investment vehicle, which is their product, which must also get separately registered and regulated. Then once they have gotten their products, the vehicles registered, and certificates or licenses issued, that is the only time now they can bring those products into the market. Once the product is in the market, then there comes the other function to mobilize resources or investment by pulling investors to that particular fund, either through advertisement, use of agents, and many other methods. Before these funds hit the basket, where the basket is not domiciled, the basket where we are putting our money is not sitting with the fund manager. It is sitting with a third player, the custodian. So the next function for the fund manager is to source for investments opportunities in the market. Before the money hits the basket, the fund manager must know where to take this money. And that is what we take advantage of as investors. You have your 100,000, your 100 shillings, the 1,000, 10,000, or whatever amount you are having, so long as you have the minimum allowed for a particular investment vehicle. The fund manager has to know where to take your money before your money hits the account. Because interest that is supposed to be paid today for the amount that you have invested or deposited starts the following day. So the fund manager always knows where to take your money before you give it to him. And that is the advantage of going through a fund manager. So sourcing the investments brings in the next function, that the fund manager is the one that advises the custodian where to channel the money. Once he has sourced the investment opportunities or where the money needs to be invested in the market, he communicates that to the custodian. Then the custodian, upon also confirming that the fund manager is within the regulations, the custodian will now route the cash collected to that particular investment. Then the other function will be to keep proper records of the investments and distribution of the incomes. Records, because the fund manager is not the one who actually distributes, but he maintains the record because the actual money is sitting with the custodian. When you are depositing, you don't deposit to the fund manager, you deposit to the custodian. When you are withdrawing, you don't withdraw from the fund manager, you withdraw from the custodian. The systems are interfaced, they are linked. So those are the basic functions of the fund manager. Then we have this player number 2, the Capital Markets Authority, that is the regulator. Function number 1 for the regulator is to carry out proper research, verification of the individuals behind the institution that is to be registered as a fund manager. The Capital Markets Authority, before issuing a license to the fund manager, investigates the individuals behind that institution to ensure that they are people of character and discipline when it comes to investor money. The other function is that once the Capital Markets Authority receive requests for licensing of investment vehicles or products from the fund manager, they are verified against the regulations. The Capital Markets Authority has regulations for each particular type of investment vehicle. And the product designed by the fund manager has to suit those regulations for it to be licensed. So control and protection begins from the Capital Markets Authority. But the Capital Market Authority is never in direct control of the investment. The Capital Markets Authority ensures the proper functioning of the ecosystem through reports and examinations of the fund managers and the records. The CMA will also receive periodic reports from the other players in the market, that is, the fund manager, the custodian, the trustee, and the auditors. Those reports include the specific performance of the individual products of this fund manager. On and above that, the regulator, that is a Capital Markets Authority, creates and repeals regulations giving recommendations to the enacting bodies for legislation for purposes of regulating the market. Then we have the third player, who is the custodian. The custodian is always a bank. And in order for the bank to carry out custodial service, it must also get registered and licensed by the regulator, that is the Capital Markets Authority, on and above the registration and regulation that they get for the banking services from the Central Bank of Kenya or from the Central Bank. Then the other function will be safe custody of the funds that are received from investors and the returns that are generated from the investments. A third function is to execute requests from the fund manager. Remember, the fund manager is the one sourcing opportunities from the market and requesting or passing requests to the custodian for funding of those opportunities. So it is the custodian who is executing those requests for investments. The custodian also executes selling instructions and buying instructions. Selling instruction is when you are withdrawing from a fund. When you are depositing, we call it a buying. So those executions are through the custodian. The system, the fund manager's system, is linked with the custodian system and other channels of collecting funds or withdrawing funds from the custodian. The other function of the custodian is to maintain parallel records. Whatever records are maintained by the fund manager for our investments about the fund, the custodian is also maintaining similar records for purposes of reconciliation. Whenever the reports by the fund manager disagree with the reports by the custodian, that will necessitate reconciliations. Those reconciliations require periodic meetings. Therefore, the custodian holds periodic meetings with the fund manager for the purposes of those reporting and reconciliation, and then reports are generated and they are issued or filed with the Capital Markets Authority, the regulator. Then we have the fourth player, that is the trustee. And the trustee is the prefect in this ecosystem. This prefect purposely ensures that the ecosystem carries out the business of the interest of the investor. The trustee investigates the dealings of the fund manager to ensure that the fund manager does not expose investors to excess risk and outlined in that specific product. The trustee will also ensure that the fund manager is within the regulations by the Capital Markets Authority, because those regulations, they are meant to protect the investors and also expand the investment market and financial inclusion or investment inclusion. Then also the trustee holds periodic meetings with the fund manager with the sole interest of ensuring that the investor interests are protected. And for that reason, the responsibility or the fund responsibility lies with the fund trustee. Then the fund trustee files reports with the Capital Markets Authority. The fifth player is the fund auditor. The fund auditor examines the books, the records, the documents of the fund manager, the trustee, and the custodian independently in compliance with the regulations and the law, and forms an independent opinion which he tables to the fund members. The investors are the ones that are called fund members. And as a matter of regulation, the fund manager is supposed to hold an AGM, an annual general meeting, for all investors or fund members in that fund unit trust scheme. During that AGM, all these players in the ecosystem must be present and present their reports to the members. So collectively as a function, all these players must attend the annual general meeting and submit their reports to the members. That 5-member ecosystem is what guarantees you security and stability of the fund. And now it's clear that what we bring together, what we deposit into the fund, a good example, a money market fund, where you bring your share, another person brings their share, I bring my share. With the basket where we are keeping this money, the fund is sitting with the custodian, being invested by the fund manager, overseen by a trustee, and regulated by another player, a Capital Markets Authority, and there is another person mandated to report back to us legally, that is the auditor. That is where the security and stability of our fund comes from. The fund manager is the key player in this ecosystem. It can be removed by the Capital Markets Authority upon recommendation of the trustee at any given time. if they play around with the fund that is our money as investors. In 2024, it was very clear when one of the fund managers was faced by a huge liability of a loan from a South African businessman, when many investors were felt that that fund manager was unsuitable. That related to a separate business, distinct from our investments. The business of the fund manager on the other side is separate and distinct from our own invested funds. So next time that you are looking for an investment opportunity or a fund to put your money, don't be lured to lower returns by looking at a name, a brand name, leaving out safe and stable investments that are giving you better returns in the market. Your interest supersedes the interest of the fund manager. Secure in your interest first to grow your capital and secure your investment. Thank you for watching and see you in our next video.